Yesterday, Tesla posted their Q2 delivery results, and I think a lot of people were actually pretty surprised. Many people coming into this really thought that the results weren't going to be all that good. The numbers were going to be maybe a little bit below estimations, and maybe according to Dan Ives and others, it would mark the end of a bad period of time, and we would then move into a period of recovery. But what I want to say is that actually the numbers came out, they surprised a lot of people, and they were actually quite great. They beat estimates. In the second quarter, we produced approximately 411,000 vehicles and delivered approximately 444,000 vehicles. We deployed 9.4 kilowatt hours of energy storage products in Q2, the highest quarterly deployment yet. So you can see here that this is broken down into particular models. So in terms of Model 3 and Model Y, of course, Model Y being their most popular vehicle, globally the most popular vehicle, EV or non-EV, very, very impressive vehicle indeed. Production-wise, they hit 386,576 vehicles, that's Model Y and Model 3. Deliveries came in at 422,405, and then you can see the subject to operating lease accounting here as well. And other models were a lot less than those two models, as always expected, but you can see those numbers here and then the total, which we've just mentioned as well. You might be wondering about the difference between the delivery numbers and the production numbers, why there is a higher number of deliveries compared to production, and that can just be attributed to the selling of vehicles produced in previous quarters, and that just indicates that they are doing a big drawdown on inventory. Drawing down inventory is usually a pretty good sign because it's indicating strong demand for their products. And by reducing inventory, Tesla is effectively converting previously produced vehicles into sales, which then obviously reduces storage costs that are associated with that and also does help improve their cash flow. And we like to see a nice balance because you don't want a company to have too much in their inventory and then they're having to, they're not selling that, there's lack of demand, they're having to pay for storage costs, blah, blah, blah. And you also don't want to see it where they've got no inventory and then there's a sudden demand and the supply can't meet it. So I think this does show us that they are effectively managing their production and their supply and demand. So just to round up the delivery numbers before we talk about energy in a little bit more detail, these were good numbers. I think a lot of people were expecting a lot worse. I think that this does really mark a period of recovery that we are now going to see. We've already seen the stock starting to recover and then some. I think yesterday it went up. It went up by like 10% in one day, which it hasn't done for quite a while. It was very nice to see in my portfolio, although I would welcome, lower prices for a while whilst I still accumulate. But we are really starting to see this shift happen. And it's not going to be the case in months and years to come that we care so much about EV delivery numbers because like I keep saying, we're moving away from that. We're moving into revenue coming from SaaS, like SaaS margin revenues. We're going to care more about FSD licensing, more about services. We're going to care more about the robotaxi fleet and Optimus. So they said in their announcement, we deployed 9.4 kilowatt hours of energy storage products in Q2. The highest quarterly deployment yet. And when you look at a graph showing how Tesla's energy deployments are going up over time, it's pretty impressive. And remember, right now, the energy segment, the energy portion of Tesla is their highest margin business. So for the highest margin business to be accelerating in growth and doing really, really well, now hitting the highest quarterly deployment to date, that's impressive. And that will show up in the numbers, in the earnings, and also in the stock. And I don't always cover every single contract that Tesla Energy get for megapacks or whatever globally because they're not always that interesting. But yesterday I did cover quite a big one in New Zealand, and that was for like 163 million New Zealand dollars. So these contracts are popping up. They're popping up globally. I've heard about some in the UK, in Australia, in New Zealand, in the States. It's really, really happening. But when you look at the quarter over quarter growth in the energy deployments, Q2 was more than double Q1. That is quite insane growth, really, and especially if we see that continue. Stephen Mark Ryan, who I'm sure you know as Solving the Money Problem on YouTube, posted this on X. Tesla delivers a few more vehicles than expected, plus 9%. Tesla on the cusp of autonomy, minus 50% from all-time highs, minus 8% year to date. Short-term, short-sighted nature of investors in a nutshell. Can't wait to see what happens when people figure out robotaxis are happening and the implications. He's absolutely spot on there. We have some short-term news about deliveries that aren't even going to matter in the future all that much. Stock goes crazy. Stock goes wild. Tesla on the cusp of autonomy, FSD, robotaxi, autonomy, Optimus, all of these big things, energy growing rapidly. People don't care all that much because the stock is still down from all-time highs by, he's saying there, 50%. But I do think this will change. I do think people will wake up and figure this out, but hopefully not before myself and you guys buy more shares. But Elon then responded to this and said, yeah, this is small relative to vehicle autonomy and Optimus. So as I keep saying, the shift is happening. I'm not going to say any more on that. But of course, the mass media was always going to come out in force and report some untrue things about these deliveries. Of course they were. We always expect that. Take a look at this. We had this from the Financial Times saying Tesla deliveries fall 5% in second straight decline. Elon Musk's electric vehicle group, it's a weird way to say it, faces slowing demand for battery-run vehicles but beat Chinese rival BYD. Not really telling us the whole truth there. And if you didn't really know about Tesla in detail and you weren't following these numbers exactly, you would just see that and you might think it's all over, there is no demand. But that wasn't the only one. We then also had this one that says Tesla posts disappointing production and sales numbers for Q2 2024. Sales fell by 5% with production cut by more. It's always really interesting to see which part of a story the mass media pick out and make a bigger deal than maybe it should be, and what parts of maybe the good parts of a story that the mass media purposely leave out and do not focus on. But do let me know what you thought about the delivery numbers. I am most excited, obviously, about energy. I like to see that they're doing well on their EV sales, of course, as well. But let me know what you thought about this in the comments below. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.